Hello again, everybody. All right, I want to take the next couple of minutes and I want to walk through some exercises here in Chapter 5 to make sure we understand what the heck's going on here. All right, so the first one that I want to take a look at is Exercise 5-19. All right, so Exercise 5-19, I'm going to close down my PowerPoint presentation here, and I'm going to pull up the textbook pages so that you could see what the heck Exercise 5-19 is. If you want to do it on your own, grab the textbook on your own so you can look for it, take notes on your own without the screen here, then go for it. It's on page 296 of your textbook. Just hit pause and go ahead and do that. All right, but I'm going to go ahead and keep going. So exercise 19 walks us through some purchasing transactions, something we haven't seen in a while since we've been focused on sales transactions so much lately. All right, but exercise 19 says Kingston Tires received the following invoice from a supplier, Fields Distribution Inc. And here's the invoice right here. We can see the invoice is dated September 23rd. It gives me terms of 110 net 30, which means, again, I get 1% off in 10 days, or I owe the full amount in 30 days. And it gives me some details of what I purchased. And then it gives me some calculations down here as far as a due date and how much I'd pay if I paid by those specific dates. Alright, so requirement 1. The first thing it wants me to do is it wants me to journalize the transaction required by Kingston Tires, that would be the purchaser, on September 23rd, 2018. And it tells me not to round, so keep numbers, do not round numbers to the nearest whole dollar, so it wants me to keep everything to the nearest penny. Alright, so I'll go ahead and do that. Alright, so here in my journal, I know that I've created these numbers already to round to the nearest dollar, so let me get them out of there. Alright, so the first transaction again happens on September 23rd. So on September 23rd, again, what has happened is we've purchased merchandise inventory. So what I'm going to do is I'm going to debit that asset account called inventory. I haven't paid for it yet, which means I need to credit an account called accounts payable. So my first transaction will be recorded with a debit to inventory and a credit to accounts payable. Alright, and then all I want to do is just pull the total price off this invoice, which is right here, $929.60. 929.6. Alright, so I'm going to record this transaction for $929.60. Alright, and I've now completed requirement 1. Alright, requirement 2. It says to journalize the return on Kingston's books on September 28, 2018 of the D39X4 radials, which were ordered by mistake. And again, it tells me not to round my numbers to the nearest whole dollar. Alright, so looking up here, that first line item in my invoice, that's these D39X4 radials. Looks like there were 4 of them that were shipped at $38.12 each for a total of $152.48. So if I'm going to record the return of those, oops, I forgot my date. If I'm going to record the return of those on September 28th, I'll just put my 28 in here. And then a return, remember, a return for a purchaser is just a flip of that first entry. So I need to reduce the amount that I owe, as I don't owe as much anymore as I returned something that was on that invoice. And I need to credit inventory to get it out of my inventory. And again, looking back at that invoice, those D39X4 radials had a total cost of $152.48. So I'm going to record that transaction for $152.48. $152.48, there we go. Alright, good. That's requirement 2. Requirement 3. Requirement 3 says to journalize the payment on October 1st, 2018 to Fields Distribution. And again, one more time, it tells me not to round my numbers to the nearest whole dollar. And it does give me one check figure in here. It tells me on October 1st that credit to cash should be $769.35. Alright, so if I'm going to record this payment here, remember, anytime we're recording a payment, it's a 3-part entry, alright, but what I want to do is I want to walk through some calculations over here first, right? So I know I started off owing $929.60, right? So $929.60, let me just make all these 2 decimal places over here. So I started off owing $929.60, right? But then I made a return of, oops, try that again. Missed my decimal there. I made a return of $152.48. Alright, so I want to subtract out that $152.48 to see how much is actually in my accounts payable. Alright, determine how much it is that I actually owe on this invoice. Alright, so I can run that formula right there, and it tells me that I actually owe $777.12. Alright, so if I owe $777.12, I know that my debit to accounts payable, the amount I need to get out of there, is $777.12. Remember, I got to zero out that account, make sure that it shows that I don't owe any more for these tires. All right, I paid within my discount period, so I know that I'm going to get 1% off. All right, so I want to take that $777.12 and I want to multiply by that 0.01, and that gives me a discount of $7.77. All right, remember, if we get a discount on inventory that we purchased, that means our inventory now costs less. So I have to credit my inventory account for $7.77, the amount that that inventory actually cost. All right, so now I know that I owed $777.12, right? I know that I got a discount of $7.77. That means the amount of cash that I actually had to pay, lots of sevens in here, is $769.35. So I know that I'll credit cash here for $769.35. $769.35. Let's check that check figure, make sure we got it right. And we did, checked off as $769.35, the amount of cash that we actually have to pay. All right, so those are some purchase transactions. Wanted to make sure we still understood how to do those purchases before we moved on to some others. All right, the next exercise that I want to look at is exercise 522. So exercise 522, again, back over here into my textbook pages here. Let me scroll down a little bit. Exercise 522 looks like it's going to begin on page 297 here. All right, so exercise 522, it says journalize the following transactions for Soul Art Gift Shop, and it tells me that explanations are not required. All right, so I'll just keep moving on with the same journal that I was using. You know what, let me do this so that you can have this for your own reference later. I'll just put a nice little merged and center line up here at the top, and I'll fill it yellow, and I'll say this was exercise 5-19. Alright, and I'll do the same thing down here, and I'll say this is going to be exercise 522. Alright, so exercise 522, one more time. It tells me, sorry, I'm a little too far there. Exercise 522 tells me to journalize these following transactions for Soul Art Gift Shop one more time. It starts with February 3rd, works down through the 28th. All right, what you'll notice here for exercise 22 is that it's going to couple these transactions. We're not just going to be purchasing or just going to be selling. We're actually going to be doing both. All right, so it adds a little bit of a trick here. And exercise 522 is a fantastic example to study for an exam, because this is the type of question that we can put onto an exam where we've covered multiple learning objectives with just one problem. All right, so I'd say this was a great one to study. Make sure you really focus on exercise 22 here. All right, so let's look at the first one, February 3rd. On February 3rd, it says we purchased $3,300 of merchandise inventory on account under terms 310 net EOM and FOB shipping point. Okay, so I know the first transaction here for exercise 22, scrolling down a little bit, happened on February 3rd. Alright, and we shouldn't need any cents in here anymore, so let me just highlight all these cells here and make sure they're all rounded out to the nearest dollar again. Alright, so one more time, we purchased merchandise here, so I know I'm going to have to debit inventory. I know I purchased it on account, so I'm going to have to credit accounts payable. So on February 3rd, one more time, that journal entry, a debit to inventory, a credit to accounts payable, and I see that it was $3,300. Alright, so there's my first transaction that I need to record here for exercise 22. Alright, February 7th. February 7th says we returned $900 of defective merchandise purchased on February 3rd. So if we've returned $900 of that defective merchandise on the 7th, then I know I got to debit accounts payable to reduce the amount that I owe, and I have to credit inventory to reduce the amount of my asset account. And again, I'm returning merchandise that had a cost of $900, so it's a debit and a credit for a total of $900 there on the 7th. Right, on the 9th, it says we paid a freight bill of $400 on that February 3rd purchase. So on the 9th, if I'm paying that freight bill, remember, we said in class that the cost of inventory is anything that it takes to get that inventory to a saleable condition and location. We can't sell that inventory if we don't have it. Therefore, the cost of shipping, we can include that directly as part of the cost of my inventory. So this one will be a debit to inventory and a credit to cash. Remember, I'm paying that freight company. So my debit to inventory and my credit to cash for that freight bill is $400. All right, so I've recorded that there on the 9th. On the 10th, it says we sold merchandise inventory on account for $4,700. Payment terms were $215 net 30. These goods cost the company $2,350. All right, so for the 10th here, remember, anytime we have sales transaction, we actually have to record two separate journal entries. Number one, we have to debit accounts receivable, and we have to credit sales revenue so that we can record the amount that these people owe and the fact that we've recorded a revenue. We need to make sure we show this revenue. All right, now remember though, with these sales, with these revenues, this new revenue recognition principle, remember we have to record these revenues up front at that discounted amount. All right, so I'll take the discount away right away. So 4,700. The discount that they could earn is 2%. So 4,700 minus 4,700 times 0.02 is how we'll record this one, or how we'll calculate that number. All right, so let me just figure out what that 4,700 times 0.02 is. Oops, sorry, I forgot my equals. All right, that's a $94 discount. All right, so 4,700 minus that $94 discount tells me I'll record this one for $4,606 as my accounts receivable and my sales revenue. All right, but remember with that sales transaction, we also have to record the expense related to that revenue, cost of goods sold, and we have to remove these items from our inventory. So a credit to inventory, so a debit to cost of goods sold, and a credit to inventory, and it tells me that the cost of these goods was $2,350. So I'll record that cost of $2,350, and that's how I record that initial sales transaction there on the 10th. All right, on the 12th, it says we paid the amount owed on the credit purchase of February 3rd, less the return and the discount. All right, so it's telling me right away that we made payment within that discount period. I don't have to determine if I did, as it told me in the problem. All right, so on the 12th, I know I'm making payment within those discount terms. All right, so let me run some numbers over here on the side. All right, similar to the way we did it last time. All right, let me get rid of the decimals over here. There we go. All right, so looking at these numbers here, I know that I started off owing, my accounts payable initially was $3,300, right? So I know that that's the first number that I'm going to see over here. All right, and I know that the next thing I need to do is I need to subtract out whatever my return amount was, because I reduced that account payable right here by 900. So I need to subtract out that return amount of 900. All right, that tells me that the net amount that I owe as of right now, $3,300, minus that $900 is $2,400. All right, so I know that's the amount I need to get out of my accounts payable. So I need to debit accounts payable for $2,400 to remove that amount from the account. All right, I know that I received a discount, right? So on that $2,400, I received a discount. The discount term from that original purchase was 3%. All right, so I take that $2,400 and I multiply by 0.03. Let me put some decimals back on there so we can see it. There we go. All right, so 2,400 times 0.03 gives me a discount of 72. Remember, the amount of the discount directly impacts how much that inventory cost me. So I have to credit inventory for 72 because that inventory now cost less than it did before. All right, so finally, I got to figure out the amount of cash that I'm going to pay. So it's negative 72 here. 2,400 minus 72 is the amount of cash that I'm paying. That tells me that the amount of cash that I'm paying is $2,328. So I will credit cash for $2,328 here on February 12th. All right, great. Look back to that problem for one more transaction here, I think, right? Yep, on the 28th, it says we received cash from that February 10th customer in full settlement of their debt. All right, so looking back at the 10th, I know that I gave them terms of 215 net 30, right? 215 means they got 2% off if they paid within 15 days. However, they did not. It's the 28th, right? It's 18 days later. That means they're not going to get that 2%. But the problem is I already recorded that 2%, right? I already took it off the top, right? So let me show you how we work with that. All right, so my transaction here, what it's going to look like here on the 28th is I'm going to debit cash. All right, I know my debit to cash is for the gross amount of that sale, right? Because they had to pay me the full amount from the 10th here. $4,700 is the amount that they got to pay me. All right, so I know I'm going to credit cash for $4,700. All right, next up, I'm going to credit accounts receivable. All right, I know accounts receivable has to be credited for the amount that will zero out that account. Well, looking back at these transactions, I've only put one thing into accounts receivable, a debit right here for $46.06. So I know I'll credit accounts receivable there for $46.06. All right, so the balancing number here will just be that $94 that I calculated earlier, the amount of that discount that they forfeited, right? They didn't get it. And I'm actually going to call it exactly that. It's called sales discounts forfeited. So sales discounts forfeited, which is actually a revenue account, right? It's additional revenue that I get to record of $94 because this customer did not pay within that discount period. So I'll record that sales discount forfeited of $94 here for this one. All right, that wraps up this exercise. I got one more video that I'm going to shoot for you guys today to walk you through the adjusting and closing entries that these merchandisers are going to make. All right, but until then, hopefully these have helped you understand this process, these processes here for merchandisers in Chapter 5.